Okay, we're live.
Thank you. Good afternoon and welcome to this special meeting of Town Council. It's a pre-budget meeting, and we'll begin by acknowledging that we are gathered today in Mi'kma'ki, the ancestral, present, and future territory of the Mi'kmaq people. We gather today with the intent followed by the Living Peace and Friendship Treaties, and we do so with respect, cooperation, and coexistence. We'll call the meeting to order. We have all the members of council in attendance, along with our CAO and our finance manager. As the first item of business, would entertain a motion to approve the agenda that has been presented to you.
So moved.
Thank you. Do we have a seconder? Thank you. Councillor Lilliscroft seconds. You've heard the motion. On the question, all in favor? Motion's carried. Thank you. Let's go right to the first and only item of business, the pre-budget report. And we'll turn it over. CAO, did you want to make any comments before Ms. Yaden Wenzel speaks?
No, I think I'll let Ashley take the hot seat. Just to say, Ashley, if I might jump in on occasion, so don't take offense, but I'm happy to let you drive.
The way my
There you
throat's
go.
feeling, jump in anytime you want.
Tell them that. Okay. Thank you. Let's go. Ashley, over to you.
All right, so I'm going to share my screen, and I think you all received this. My apologies for this being sent out so late yesterday. It there's been a lot of viral things going around my house, and everything's kind of been delayed. A little hard to work from the ER, but in any case, we got here. This is a very happy memo, I think. I'm very happy with it. Dylan has been an amazing help in supporting me this week. So basically, we're going to go through, talk about sort of the revenue streams and what it looks like for the town for the budget for 23-24, where our reserves, which is the most exciting part, where our reserves are, meaning where we're going to go, how we're, and then we are going to talk about the debt that we have, and of course, if there's any questions. So let's go into the property tax. So you can see right here. So first of all, obviously we've kept the rates the same as in the prior year. So we have our prior year assessment for the general and our prior year revenue, and then our current year assessment, which you see has increased, and our current year revenue. So we're looking at, based on the general tax rate of last year, we're looking at about a $690,000 increase in revenue. Looking at the fire tax, the same thing. We're looking at about a $52,000 increase in revenue. And then, so you'll notice this is basically a pull from our budget. Just a little easier to see right here, but this should look familiar to what we have, what we usually have in our budget. Same with the change in assessment. Here's what's happening due to events, residential, resource seasonal, and commercial. Then we have growth and general assessment. Sorry, my voice is starting to go. And same thing, residential, resource, seasonal, and commercial. So are there any questions on this section? As you can see, I think it's what would be expected for this year. And sort of Joe's idea last year of breaking out the long-term care facilities so we can really kind of hone in on exactly how much of the tax that we're receiving from that is such a substantial contribution. So we've continued to break that out for this year. So any questions? All right.
Ashley, just I guess a comment, as much as I know, because we had a lot of back and forth and didn't have a lot of time to discuss some of these things. I was just looking at the change due to events in the assessment.
Yeah.
And, you know, the larger part of the change due to events showing up in residential there. I know there was a fair bit of residential construction, but with these numbers, is the nursing home
Yeah.
valuation in the residential, I think? It must be. Because I don't think we had $15 million of home construction.
I believe so. I'd have to go back to my Excel documents. I think the way, if I recall, the way the assessment report, the nursing home was actually broken out into two different, it was residential and commercial. So I think this was just the way that they assess it. So this must have been the change on the residential side of it.
I mean, it's good to see it like broken out above. I was just wondering how it reflected in there, so.
Yeah, no, that's a good point. I can take a look at that. And if you want it sort of the long-term care facility broken out even further down in this, we could add that easily enough.
Yeah, I guess in the proper budget document, it might be good just give it its own line for
Yeah.
in both sections.
Yep. No, I agree. I think that's a great idea.
But the growth in general assessment due to, you know, assessment change and not due to events is a subject we talked about a bit before. So it is interesting to see the residential uncapped residential shake out to 9.25. I think Joey had a few conversations about that.
Mhm.
Yeah, that's really interesting.
Yeah.
But about 10 of that is the nursing home, right?
Well,
Yeah.
the nursing home is up in the change due
Yeah.
to events.
It goes from 6 to 16.
It's the growth in general assessment residential of 9.25. That's not due to events. That's just inflating of the property.
Also a rebound of commercial, that 21 for commercial is more, it's similar to the historical. That before, the pre-COVID number, 21 million. So
Yeah.
during COVID, it's some.
Yeah, actually, you might want to check on the change, because I think that should be reflecting differently below. But yeah, Joe, you're
I
right.
think that is right, though, I'm sure that.
Well, I think the upper number is the one you're quoting.
Yeah, the upper
And I think
number.
the upper number would definitely be right. It's that part's for sure.
Sorry, upper number?
So the percentage of growth in commercial, before it's broken out into due to change in events or due to assessment, just up above where it just shows the change in commercial, it's larger in proportion than it looks like down below.
Oh, yeah.
And I think when we looked at the previous draft of this, it was showing a larger percentage increase in commercial that, as Joe was saying, it represents a bounce back of not all the way back, but some significant portion of the way back from COVID.
Yeah.
And I think we figured it would take 2 years, so.
Okay.
Ashley,
Yeah.
what does the expression mean, change due to events? What are events?
Like building or renovation, that type of thing. So things that would trigger, and it's things that would trigger a change in assessment that wouldn't just be because the assessment's being increased. You'd physically be doing something to the property to increase its value.
Thank you.
Or that would also reflect demolitions and fires in the negative.
Yeah, exactly.
Those are big numbers. That's a big number, 14.
Hmm.
I'm just, I have this wave, I just have this vivid memory of my dad coming in, was so excited because the assessment went up by $500,000 in 1 year. And it was like, this is a long time ago.
This time
But
around, it's
now it's
the revenue from the assessment.
14
has gone up
million.
by that.
More. Happy day. Yeah,
Everything's just getting bigger.
exactly.
All
Well,
right.
that should make for some good conversations when we get to the budget about how that surplus will be allocated.
Yeah, exactly. I think I'm happy with seeing these numbers. So hopefully you all are too.
We don't
So
talk about expenditures today, so we don't talk about the policing services bill that we're getting, but everybody's seen that on the news.
yeah, so that'll absorb lots of our time in the next meeting. So water rates, we're going to, now there isn't, I don't have any numbers right here, but we're basically continue on using the same rates that we've been using. So I just wanted to make
Note here
it.
is just that we went 3 years without any change, had 3 years of changes, and now we've gone 2 years without any change again. That really
Yeah.
wasn't intentional. We were going to apply for water rates last year, but the electrical rates process well, it's still ongoing, unfortunately.
Yeah.
So this year, we would mean to do a rate study and come to council with a recommendation for the next 3 years. So there will probably be mean, considering the inflation of costs all across the board, water's not going to get off without anything, but because it's regulated, we'll have to wait until next year to actually see that.
Yeah, and I think that, you know, just looking at the expenses and what is actual going for a rate study right now would be incredibly appropriate. So I think that that's something that we can look forward to. Now the electrical, we're all sort of on the same page with the electrical right now. It's like, you know, I always say it's like the present under the Christmas tree, you know, you just want to open it. I just want them to call us and tell us what our new rate is. So unfortunately, I was hoping by this time we would have something, anything. We don't have anything right now. RELC hasn't received their rate either. So I would assume that they're probably going to obtain theirs before us, since they went 2 weeks before us to the board. So I guess, you know, unless council feels otherwise, I think, you know, looking at the rate that we applied for is what I'm going to use in budget to assume the revenue. Obviously that you know, is up to council's discretion on how you feel, but you know, it's hard right now because we really don't know what the UARB is going to tell us. So it's kind of a shot in the dark at this point. Who knows, maybe we'll get lucky and Monday they'll give me a call. And I actually thought they called last week and I got so excited and then they didn't. So, so maybe they will call and they'll make my day, they'll make everybody's day. But if not, I think we need to decide on a revenue number. We can go with the number that we applied for. We can adjust it. Obviously, that's council's discretion. So any thoughts on that?
We're trying to adjust it for the NSPI rate changes and everything, but we don't really have a number. So,
Yeah,
you know,
it's so
we're
hard to
better off
determine at this
projecting
point.
this and having a surplus and then having them knock it down, because they will knock it down somewhat, even if we're not forced to phase in and over a longer period. They'll still knock it down somewhat, I'm sure, from the 34.8.
But
So-
how much? I just don't know.
So from
Deputy
a-
Mayor has a question.
Yeah,
Deputy
just
Mayor?
yeah, thank you. Just wading in on that, I was sort of wondering, we can't make any extrapolation from what they've done with NSPI. I think everybody, from my perspective, everybody understands we won't get the 34.8, and and in terms of projection, I would rather project with a, I guess, a more pessimistic than
More conservative? Yeah.
yeah, more conservative than think that we'll get all of it. But I guess there's also a messaging to the URB that we want this, but I'm not so sure we'll get it.
Well, it's linear, right? It's a linear relationship between the expenses and the revenue based on that percentage. So I agree, Deputy Mayor, that if the revenue line gets backed off, so will the expenses, because that will be reflective of the flow through costs.
Yeah, I mean,
So-
you know, we will end up in a better position using 34.8 than we, you know, probably would be in anyway.
At the end of the day, the rate that we've proposed allows us to have a break even year, as I
Yeah.
understand it, right? So you're plus or minus $100,000 on
Yeah.
it. So, I mean, it's just a plug at this point anyway.
Yeah.
It'll be revisited with the actual number in due course. I mean, if we're not successful, we're still gonna need that revenue. That revenue's now, instead of coming from the ratepayers, it's gonna be coming from the Bank of Montreal,
Exactly.
right? So it's just, I think solving for the revenue number is directly correlated to the expense assumptions. And so I would go with the posted rate that we've asked for as a placeholder.
I mean, I guess that's a good point, Joe, in terms of the, you know, how do we do the expense projections? And actually, I don't know how much, you know, we'll be talking more in the next week, I'm sure, to get this document to council, but, you know, we get our projections typically through area.
Yeah.
So if we have updated projections based on the Nova Scotia Power decision that has been issued, whether to use those versus to use the projections that were used in the rate study, which is what we used when we determined that 34.8 was the necessary increase. If there's a gap there, we could look at a proportional reduction in the revenue, because we would know that there was that proportional gap. I mean, that's the only way I could see reverse engineering a lower rate than 34.8 to use for this.
Okay,
I
so,
don't know if Aaron has given us those type of projections at this point, or if we are just going to use the rate study numbers for the.
Yeah. So right now for the cost for NSPI and the cost for import or sorry, not import, we're not doing that. We relied heavily, Aaron and I sat down and worked on it together. We relied on Trent's, which is BDR's forecast for the test year. So we are using basically the information we used to apply for the 34%.
Makes sense.
So we haven't reduced it by anything on NSPI's, anything based on the NSPI decision, yeah.
They'll both come down if they come down, so we'll just.
In relationship to one another.
Yeah.
But
Yeah,
plus, I think there's a virtue in being consistent, and just like we've already announced the rate increase. I mean, hopefully we will get some cost reductions from NSP so we can reduce that if that's allowed. So we'll see. I think we should just go with that.
yeah, I like, you make a good point, Joe, that, we're not looking to make a profit here. We're basically looking to just recoup our expenses. So, if 34% is what we need, whether we get it through the rate or whether we get it subsidized by borrowing, regardless, this is what we need to come in to pay for our expenses going out. So I think that that's a fair argument to keep it at this rate for the budget.
yeah, I agree.
Well, that's the operating side of things. I think the capital side is even of more interest.
Yes, this y'all, I'm actually very excited about, because this has been plaguing me since the moment I stepped in here, and I'm sure you all are just as excited as me. So basically, Dylan and I had to go through and figure out, there's been some discrepancies on what the actual reserves are over the last couple of years, just from a cash basis and exactly how much cash should be in each reserve. Ideally what you see in the bank account for each reserve ties to what we budget for, ties to what we see when we allocate the surplus and we net it off the depreciation for electric and water and all those good things. And there has been a discrepancy in the last couple of years. So it was vitally important that we figure it out. We figure out where our reserves are at. And then we kind of start fresh and clean. We have our amounts now, and then we can track them accordingly, properly, and just really make sure that we know what's going on. We know how much money we have on each reserve. Obviously, reserves are for, council's initiatives for capital expenditures. So it is very important that we have that, so that, if we do have to borrow money, we know how much we need to borrow, how much money we actually have in the reserve. So this is a very important step in, I think, us as a whole getting more organized, really getting an idea of where we're at cash-wise, reserve-wise, and I'm just really happy to be at this point. So basically what we did was we took the total cash. We started at the March 20th. Obviously today's 31st. So I couldn't perform the analysis on the year-end cash at that point. But in the bank account on March 20th, we had 3.5 million. Within that, we actually had some already spoken for, I guess, money within there that's already to be allocated. So we had the outstanding BMO balance for the solar garden. We had the unallocated surpluses. We had a surplus for water, and then the fund balances in the electric and water surplus for 395. So basically what I'm saying is, here's how much cash we have. These amounts have already been spoken for. This is how much cash, 2.6, is what we have left to be allocated to the reserves.
And Ashley, before you move down to the next table, I just wanted to speak to a couple of these ones. The BMO loan balance not allocated to Solar Garden is a concerning number in a sense, and I just wanted to point out So we have a $2.7 million revolving line of credit at BMO to cover Solar Garden costs. That was estimated based on some work that Aaron and Luke did to say our share, which is a little bit over half of that, will need to be accommodating the slowness of federal claims processing. So rather than only having the, I think it was 1.4, whatever our resulting share is, instead of just having that, we would need more than that to buffer the federal claims. So right now, because of the federal claims taking so much time, we only have $62,000 of buffer on that 2.7 million. So we're now going to start cash flowing from other available funds until we get those federal claims in. So unfortunately, I think that 2.7 maybe wasn't quite enough, but I just want everybody to understand what that 62,000 means. That's all that's left now before we're pushing into other funds to support the project. Although there are a lot of federal claims outstanding, I think it's more than $1 million of federal claims outstanding. Obviously, there would be. And then just to comment on the unallocated surplus, obviously it's year end, so I don't think we're expecting to post that as the surplus for 22-23. There's things to tie up that will feed into that, but we had to make sure it was there because it will either be monies that actually were allocated in 22-23 that get tidied up in the next couple of weeks here, or it is surplus and then council would determine to transfer it into reserves. In this case, it doesn't include, Ashley, correct me if I'm wrong on this, the unallocated surplus hasn't yet been divvied up between the cemetery and general, but it has already factored in fire, right? Fire's already gone.
Yes.
Yeah. Okay.
Yes.
So this would be the cemetery and then any allocation of costs that come in the next couple of weeks here. I'm sure it will be reduced, but it looks like we're headed for a surplus of some amount once that all shakes out. And then just to note on the electrical, having no surplus, well, we're working on the presumption of a deficit in the electrical. So it's not only no surplus, but the resulting prior year fund balances, which is the 395, that's actually already been reduced by the difference there in terms of the electrical deficit. Which is what we had expected. That's what, and we don't know for sure if it'll be exactly that. We had to use, because of the way it lags in billing, like we did actually kind of have to just use the numbers that were budgeted for that deficit. So it actually may be a little better than that, but that's where we were.
One thing about the claims for the Solar Garden is that they are being put in on time. It's just taking a long time on the other end to get them back. So originally we were putting them in, and then Megan, who kind of runs the area accounting, has been doing them for everybody. And I know she's been putting them in, but they've had a lot of system errors, and there's been a lot of things with their database on the government side that has caused a lag in sort of us getting back our claims. So we will get them, but there is certainly a time delay in that, which is frustrating, but there's not much we can do about it. I know Megan's been calling them and on their case a lot, because I've been calling her. So we're both trying to get our money, but it's certainly not through the lack of trying to get it sooner.
The
But I
good
think it's
news,
just
I guess, is that we have 2.6 million of reserves that can be potentially used for cash flow. So if we do have to do that, but I think when we get to the end of this morning, what we're hoping to do is be in a situation where council should actually authorize money from a reserve being used for operating cash, So that's something that in the past, because we didn't have the money in the reserve accounts, it was as you'll see here, it was mostly in the operating fund. It would often be used for cash flow on a major. We just did with the fire station, used it for cash flow on a major project. That's all wrapped up now, but we will probably need to ask council to take, $500,000, for example, out of the capital reserve temporarily. For a couple of weeks while we await some of those federal claims, if the next raft of bills for the solar project come in before we get the next bunch of claims processed. So just to mention that, we'll actually come to council about that, whereas in the past, there was no reserve balance to specifically reference transferring.
Just a quick question. So, I mean, this is phenomenal progress. I'm very, very happy to see the breakout. You know, I guess for 2022, the financials that we just approved a month or so ago. And then this year, we're gonna have fully utilized the short-term borrowing, sort of at the year end, we'll have drawn down the full 2.7 million versus kind of our historical run rate in the $400,000 range. Fair enough, for all the obvious reasons, the fire hall financing, of course, and now the solar garden. I guess now that interest rates are materially higher and we're not borrowing at 2% on that line, but now borrowing at, I don't know what it is, actually 5 or 6% at least.
Yeah. at least.
That interest being accrued is material, hundreds of thousands of dollars. I don't think that the town operating, I don't think town general should bear 100% of that interest cost. So if we're borrowing to finance the solar garden through the short-term borrowing, then we need to somehow allocate some of that interest out to the solar garden project and capitalize it. Anyway,
Yep.
I just don't think we can have the tax base fully covering all that interest when it's really towards a capital build. So we didn't do that on the fire hall. So the community subsidized the fire department costs because of and we didn't get that interest through fire rate. We got it through tax rate. Fair enough. But going forward, I think for this year, if we can, making sure that the solar garden investment is that expense gets allocated appropriately. I think that'd be a wise thing for us to do.
Yeah, it's not eligible for cost sharing. so
No,
it's our
no,
cost,
but
still, we could still capitalize it on our end.
And it would get added to the PPA calculation and we would recover that cost
Yeah.
through the rate base.
That's particular to this, wouldn't
Right.
make as much difference for the fire service, but it does make a bigger difference.
But now we're talking, like 6% of $2.7 million is real money.
I think definitely getting it in the PPA makes a lot of sense. I
Sure.
also think that one of the implications of understanding the reserve balances better is the decision that we'd make about, we're getting a $2.7 million line of credit. We have $2.6 million of reserves. When we did the fire station project, by accident in many ways, we ended up using our own reserves to cover.
Right.
So we actually, didn't
Saved.
spend as much in financing. So
We did.
we can intentionally do that. So when we look at a bigger project and we have an actual sense of what money we have available, we could say, let's cash flow $1 million of this project from reserves instead of line of credit, and save some costs. It was much harder to do that until Ashley was able to do this work to really say that money is there, even though we were forced to do it with the fire station. That money was in the operating fund at that time. So it was a little bit less strategic and more coincidence. We were forced to do it. So the next thing, Ashley, is where is the 2.6 between all the reserves? So that's great. I'm looking forward to that part.
This is my favorite part. Here you go. Yay. All right, so I would like to introduce the March 31st, 2023 reserve balances. So this is where the 2.6 is. This is where our reserve balances are, and I am so happy.
And actually, I'm going to add a quick disclaimer on this one just before you get going. I was messaging back and forth with Ashley while she was in the hospital and everything, and there was just one little detail that I caught, but I caught it too late to adjust the table. So I put it down below in that paragraph. Council did make a mid-year decision to use the capital reserve for $250,000 for the fire station project, not the fire reserve, but in the table above, it's the fire reserve that's taken that hit. So take
This
a
is-
$250,000 from what you're seeing here under capital, put it in the
Move it
fire
to the
equipment.
fire.
That, I just couldn't change it at the last minute, but then we'll change it in the budget documents.
Just to clarify, Dylan, are you referencing the rescue truck or you're referencing the contribution towards the auditorium?
Yeah, no, the building, the auditorium.
The auditorium,
Yeah.
okay, fair enough.
Contribution.
No, the rescue truck did come out,
250.
the rescue truck purchase is reflected in the 88,000, which is actually 88,000 plus 250,000 when we reverse that.
Thought that looked. a little
Yeah,
low.
no, when you look at it in the table, something clearly was different because the capital reserve, we expected to be this high until council made the decision to take that 250,000 out of the capital reserve. And that's the only change here.
So it comes out of the line 2 capital. reserve.
Yes, yeah.
It gets
Yeah.
added.
So it's all in the 2.6, it's just which reserve.
It's just allocated incorrectly there. Yeah.
And that was, it was after last year's budget, so
So
it
actually, the
was,
fire's equipment reserve should be a little over 3.
yes, yeah.
Yeah, exactly, by the 250. But I think that, if we were looking at all the reserves here, I think that we have some pretty healthy balances in these. And I think that the 2.6 allocated is appropriate where it's at. We combed through it, Dylan and I, and there was sort of, I don't know if Dylan felt this way, but I definitely had sort of a knot in my stomach when we were doing this. So I'm very happy to see the end result, and that I do believe that these are good numbers, and that our reserves are fairly, a lot healthier than maybe we knew. And this is going to be our starting point. So we should be able to now trace, our reserves equal the cash that we have. So there should be no discrepancies going forward. Here's what we have. We can now record the ins and outs and the due to froms if we need to borrow some for any projects like solar easily. There should be no, I think Councillor Feeney last year was kind of trying to explain how the status of funds on the budget wasn't necessarily exactly what we had in the cash account. And, it was a very convoluted process, and it was a little bit of a spider web. So this should be a lot simpler. We now know where we're at, and we will be able to tie it back to where we're going. And I'm just really happy that we've gotten here. So are there any questions on any of the balances?
And just a quick note before we go to questions, I just wanted to add one more thing, actually, and it probably would go
Absolutely.
anyway. Just
My throat
so-
is hurting, so you talk as much as you want to.
I didn't include in this report the actual reserve balances when Ashley ran the cash on March 20th. So basically, this represents what will true them up to. A lot of the money was sitting in the operating fund.
Yeah.
So after this, and before we start the 23-24 year, Ashley's going to actually put these funds in the reserves.
Oh, yeah.
And what that means is the cash on hand will drop,
Yeah.
which is why I was referencing earlier that then we might have to go back and ask council to bring money out of a reserve if the federal government doesn't get us those claims.
Yeah,
But at least we would know it was actually in these accounts.
yeah.
Yeah.
That's great.
Yeah.
Tremendous.
Exactly. So the total cash will still all be there. It'll just be allocated proportionally to where it should have been. And then, like Dylan said, should we, need to move it around, we certainly can. But so the bottom line won't change. It'll just be an allocation among the reserves to true them up to where they should have been.
I see the deputy mayor has his hand up.
And the mayor.
The mayor's on mute.
Oh, that's what happened. David's on mute.
While we're demuting, I just have a quick question, Ashley. How does the 345,000 operating reserve compare to what the province recommends? I've forgotten what their ratio is, what they suggest.
I know
say 6
Dylan
months
knows
of-
this off the top of his head.
Of operating revenues is the it's in between 3 and 6, but 6 is the ideal, and
Yeah.
we're a long way from that. Yeah.
Yeah, just wondering. Thanks.
Apologize for the speaking with my mute on. Deputy Mayor has been waiting.
Patiently.
Thank you. I have one question and then just a follow-up on that, what Councillor Wilson asked. The one question is, kindly educate me on the Athletic and Cultural Trust Reserve. What exactly
Great question.
that means, and then the other piece I thought is that the province, the actual number they look for is not the overall reserves, but the operating reserves, right?
Mhm.
They do rate us on both the capital and operating.
Okay.
But our capital reserve numbers are pretty good because it's basically the total of almost everything here. But the operating is the one where we're quite a bit short. And a lot of the municipalities, like the big rural ones, will just basically put everything in operating reserve. They don't have a lot of obligations to capital. They convinced the province to stop reporting operating and capital numbers separately. So instead of telling us, you need to have more money in operating, you need to have more money in capital, those are still their that's still their guidance. But the actual financial condition indicators now just has a reserves number. And that was basically because the rurals put everything in operating. In our case, it's the opposite, everything's in capital, but it'll still show up better as a financial condition indicator, because I think the rurals were getting tired of being pressured to put money in capital
Yeah.
reserves, and they didn't actually need to put money in capital
know.
reserves. And it was making them look bad, because the red indicators, nobody wants the red indicators.
Yeah, excellent.
So to Francis's other question about athletic and cultural trust, and this is a great thing, maybe this year we could resolve the status of this. So this was a program, and some people remember it better than me. It's a long-standing program of the town. It predates me being here. I don't think we've received any donations to it since I've been here. It's just been the same number for a very long time.
Yeah, it's just interest that we're getting on it with
It
the,
was set up, actually, it's interesting now in hindsight, it was set up very presciently to maybe anticipate the CRA's eventual crackdown on donations. So actually, the way this was set up, and Suzanne, this is fairly relevant to the senior services question. This was set up as a reserve that people could contribute to, and they would receive a tax receipt, donation receipt, but then the town would be able to allocate it based on criteria, rather than the person making the donation attaching strings, which would change that donation in the CRA's mind from being a donation and wouldn't be receivable anymore. So this was the right structure, and we still can use it. We'll be trying to do the original terms of what this money can be used for if people want to donate, but we haven't solicited donations in so long that no one is aware of it. So it could be a useful tool, or we could just zero it out, put the money into general operating or capital or whatever, and not ever speak of it again. It really is the council's discretion. And I see the deputy mayor's got his hand.
Deputy Mayor and then Councillor Carver.
Thank you. And so in general, in terms of reserves, yesterday we were talking about, for instance, the swimming pool and the potential for us needing to figure that out. And I was sort of wondering, do we have the capacity or ability for us to say, well, we need to start a reserve fund that maybe, for instance, we can call recreation, so that when things like this come up, we're not starting from scratch or from zero. And how would we go about doing that, setting up a new reserve that hasn't been there in the past?
It's a really good question, Ashley. Since your voice is pressing you, I think I'll just keep answering, but feel free to jump in. So as far as that goes, the reserves are entirely at council's discretion. We can create as many as we want. I mean, Ashley obviously has to actually set them up with the bank, and that's been a problem in the past when we create it conceptually, but not in the bank. But yeah, it's discretionary to have reserves. You can place limits on what the funds are for. In the last 2 years, we established a wastewater reserve. We actually didn't do it by policy. We just did it in the budget by Luke saying, put $15,000 in this reserve, and then that's where we said it went. So now we've got 30,000 showing in there for wastewater over the last 2 years. That's a $15,000 a year contribution. But the decision to do that is totally elective. So I mean, on one hand, we could say in the budget, let's budget some money to a recreation reserve. On the other hand, more appropriately, we actually have a policy. Councillor Carver brought this up a while back. It's an old policy. It's fairly dated. We are in accordance with it, but it stops far short of what we actually would do. And council did direct staff to develop, I believe it's on our list of tasks assigned, reserve policy. So after the budget, when Ashley has a little breathing room, and procurement policy is also on that list, we did mean to bring an updated reserve policy. And that would, take what is a practice in the budget and make it more codified and, more stable, I think, in the long term. But I wouldn't use the Athletic Cultural Trust for the purpose of a recreation reserve. You could put the money from there into a recreation reserve, and you could do good on your promise to the donors by doing that, because once it's in there, it'll be used for that purpose. I think that's a good way to take it out of there, probably. But the idea of that as a flow through, as Joe said, to accommodate donations, and if we don't mean to solicit donations, we can get rid of it, but maybe we will use it for that purpose in the future.
Councillor Carver.
Thank you. So there's two comments on the Athletic and Cultural Trust Reserve. I understand that at least part of the amount that's listed, shown there, is attached to a donation that had some conditions, and I can't quite remember what they were. But for some reason it was difficult to expend them.
I think it was just my understanding is just the conditions that we attached to the trust fund itself. Because the whole idea was that donations couldn't have strings attached or they wouldn't be
Yeah.
receivable. So it shouldn't be something on the donor's end, but we did restrict it. And we said I believe it was for recreational capital. I'd have to go back and look if it's capital only.
And yeah,
But the easiest thing to do, as the deputy mayor said, would be transferred into a recreation reserve, which the town could also contribute to. And then we'd know that the money was used in the way it was intended.
if it was transferred into a recreational reserve, would that then preclude the possibility that an organization that wasn't specifically recreational, although that could be a pretty broad definition, I'm just concerned about losing the potential for not-for-profit organizations that aren't registered as charitable organizations, would lose that opportunity to be able to channel donations through the town.
Yeah, well, if we want to use it just for that purpose, we just have to talk about actually, using it, because we just haven't used it in so long. But if council wants to use it for that purpose, like we absolutely can. We just have to basically solicit donations, make a point of that, and then in the granting, we either use it ourselves or we say in the granting process that we're granting it out. It's not just about giving money to a third party. It is also about providing charitable receipts and donations to town projects. But yes, it would be for that. And we can't use it as the flow through for senior services because it's the athletic and cultural trust. So we have to set up another similar flow through for if we're going to take seniors. We had a request to take senior services donations.
I just want to give an example of where that fund was extremely helpful. That before the Mahone Bay Center obtained charitable status, that donations were received flowed through the town at that time. And it was one of the factors that helped the Mahone Bay Center exist as it exists now. So it was an incredibly useful function and that I would hate to see lost.
Okay.
Another,
We should keep the mechanism.
Hmm.
It's just a question of, it doesn't necessarily need to have a balance.
Yeah, well, that's the thing. We should either
You
grant
should-
it out or
you should
spend
try,
it, but we,
you know, so for example, we have a $6,000 lawnmower appropriation. This would be a way to fund a piece of that, for example. Or $600,000 swimming pool, for example, depending on whatever the balance is, but it doesn't necessarily need to be retained. You should utilize
yeah,
it.
and if we,
On a
and
periodic
it's an
basis.
interesting example, like if we meant to, and I'm not saying council has elected to, if we meant to solicit donations towards the pool project,
Mhm.
this could just be said to be the beginning. This is the opening balance, and let's go to the
Mhm.
community, and maybe over the next year it becomes 15,000. But we haven't decided that we would solicit donations for that project. So
Mhm.
that's what my point about just using it, using the mechanism.
well, I like Councillor Feeney's idea of keeping the mechanism somehow, and maybe it's by keeping the Athletic and Cultural Trust as a mechanism and putting the funds, the $3,600 into the recreation.
And it's audited, right?
And I think in the
We audit
reserve
that.
policy, maybe what we do is we broaden the definition of athletic cultural trust a little bit, because, right now it does, like health, a lot of the grants traditionally we've granted to health providers. I don't think that would fit that description, but I don't necessarily think it shouldn't. So we review the terms associated with it as a holding account, and we could create more than one. You could say, if you want to make a donation to athletic things in Mahone Bay, here's an account if you want, but I think it would be better to have a slightly broader purpose.
Yeah.
The only thing is donors want to know. So if you make it too broad, somebody might say, oh yeah, you're just taking my money. So that's the only question. But I think the best way to deal with that would be in the reserve policy. And as I said, we've already been directed to come forward with that. It'll probably be in May or June at this point, because we got to get through the budget.
I think if we're gonna solicit funds, we should have it towards something specific so that people know where it's going.
Yeah, you can't be explicit on, it's just the CRA, but you can't be explicit on the donor end, but you can say any money you put in this reserve, we will use for this purpose. It's our intent, not the donor's intent.
So not to belabor this point, but in terms of updating the definition of the Athletic and Cultural Trust, will staff initiate that, or does that have to be done under?
I think it has to happen
Direction from
under the
council.
previous direction from council to revise the reserve policy. So when we come with that, because that's one of them, so it will have to be.
Okay, excellent. Thank you.
Dylan, just while we're on that, and Ashley, if you don't mind, I wouldn't mind following up with a few questions on the perpetual care funds. Whether these are just the cash balances or these are the asset balances. So do these include the loans to the water utility, for example? Anyway, we don't have to talk about it this morning. But I do think, Dylan, if you're going to develop a reserve fund policy to draw, like what's the policy to draw down on them? The two funds that if we do require temporary use of the funds for town purposes, specifically the fire and the perpetual care funds, I do think we need an interest rate policy. So we can borrow from ourselves, which is
At a fixed rate. It's established.
well, we can borrow from ourselves from the operating, obviously the capital reserves and all the reserves, as you indicated, to reduce our interest rate costs. Fair enough. Like, why would you borrow from yourself? But I think those two funds have specific nuances where if we are going to draw down on the perpetual care funds, they should be a rate of return.
Yeah, I mean, I think really the electrical and water should probably be treated the same way.
Fair
Yeah,
Agreed.
like prime. I think the good precedent would be the loan that from the perpetual care fund to the water utility, whatever those.
which, actually check on that, to Joe's point. I think that what we're seeing here in terms of perpetual care reserves would not
include the debt.
due from,
Yeah.
no, I don't think it would.
No, I agree. Well, this is just terrific progress. I can't, and they're so close, Ashley, like the balances are so.
Oh, yeah.
They're so similar.
They're
They're so similar to what we expected.
Yeah, that's where the knot in my stomach kind of released once we figured out the end where we were and what we kind of hoped for. So I'm really happy with this result, and I feel good about these numbers. Hopefully you guys do too.
Ashley, do you want to scroll down to that comparison that Joe was showing? Was talking with? So yeah, this was how our estimates compared to the actuals, and obviously the bigger difference that we'll see here in terms of these estimates, and it's reflected in both fire and capital, is with that switch. Because when we did these estimates, we hadn't decided to do that, and then that decision came after. But oh, and then the big note on this one, of course, the water depreciation. So if you've had a chance to review it, you'll see, and I've got a note there below here. We have a decision to make. We just finished a major water capital project. It's been currently the cost of it, that the total cost about 465,000 town's cost. Obviously, we're not the only contributor. The other one was about 350. So that is currently draining the depreciation reserve and taking a hit on the water operating fund, prior year surplus. Basically, we took the whole depreciation and then some of the operating fund. So if we choose to debenture it, that'll pay back the operating fund and the depreciation reserve. And I think, the board would not look kindly on the way we've, like, as a permanent decision to say, let's completely drain the water depreciation fund. I don't think the board would look kindly on that. And practically speaking, it's a real pain to go out and do a bunch of borrowing for $10,000 projects. Which we could do just once for this. So I would recommend that we look at getting this into the fall debenture. I would love to see that we're getting in for the solar in the fall debenture. The timing will be right on the line. The projections that we'll have it finished in time, it may not be. I don't really love to go into a debenture for just the 465,000, but I mean, it's still a large enough chunk that I think it makes sense. So anyway, just wanted to clarify that money will come back into reserve if we borrow for it. Right now, it's not reflected borrowing, it is reflected in a hit on the reserves. It'll flip. And then there'll be financing costs, which, is it worth it in order to have a balance in the depreciation reserve? But anyway, that's the question. We'll deal with that in the course of time.
Your worship, if I may, that 465,000 that's the tie into the nursing home, right? Now, when we agreed to do that, we talked about the possibility of that being partly funded by the bigger project, which has been approved, correct?
The bigger
Yes.
project has been approved, but the
shift of money has not.
No, well, it couldn't, the timing was not, it would not have been possible. Like, we had to give up, when we agreed to cost share with McLeod, we had to give up on the notion of provincial funding.
Oh, I missed that.
Yeah.
No. Okay.
Yeah,
Got it.
so basically, we would be,
Yeah.
reducing the project, but in this case, it works out, we got 40% cost sharing from the cloud instead of the 73% we should have gotten, yeah. And the province just, I mean, I don't wanna, but very frustrating that they knew about it for 3 years.
On
and
the
couldn't
flip
get it.
side, we're already doing $16 million of rate base.
Yeah, it's certainly a justifiable investment on
So the provincial people wanted for a big lunch.
Yeah,
Yeah.
well, fair enough. But I guess, Dylan, that recurring theme of we're a little town cash flowing big projects. And it really, really matters when the federal and provincial government don't issue checks.
Yeah,
You
yeah,
know,
well,
so this is
when
the,
they don't agree to cost share on something, and then when they also don't flow the money quick
Yeah.
enough, yeah.
yeah.
Thank you.
All right. Any other questions?
Oops, I didn't see it.
Good. And then we're just have a little bit of a, just an analysis on the debt, for.
And
that
actually,
we
a quick
have.
disclaimer, just so you
Yeah.
don't, I'm the one who snuck the debt ratios in here on the bottom. So I'm gonna put a disclaimer here. These have not been checked by Ashley. I would say I'm probably out by plus or minus 0.5% on these, but I did think it would be a good idea to express them. And just to mention, this is only actual long-term borrowing, which means that the 2023-24 does not reflect the solar garden or that water project we just spoke about. It will never reflect the water project, I'm sorry, because that's a water project. But the solar garden is a town general project, so when it does become long-term borrowing, that, not at 2.7 million, but at our actual cost, that will be added the following year to the debt ratio. So in terms of commitments we've already made, our debt ratio, we're probably looking at closer to 8. But in terms of what will be the case in 23-24, it's the 6.8.
So-
and I'm sorry, Ashley, you please speak to the numbers. If I didn't mean to cut you off. I just
No, you're.
felt bad
that's
for
fine.
putting it on you because I did the math on that last piece because I know you were passed out last night. So
What is?
No,
the-
I
what is the
appreciate
ratio?
it. So it's just for information purposes. Obviously, you can see what we have right now in what we have left in our debentures from MFC.
But what is the ratio? It's debt to what? Debt to revenue or debt to assets?
it's actually a debt service ratio.
Debt
So
service
it's actually the payments on the debt
Payments to
against
revenue.
tax revenue. Yeah.
And it's revenue.
And when I did this, the province will, I should further disclaimer, the province will probably say ours is a little bit higher than I did because I was counting revenues that are applied towards the debt payments as a reduction in the debt payments in the ratio.
Mhm.
So for example, the fire department, agreeing to pay through fundraising, the province
They don't necessarily.
may not, I doubt, when they look at that, consider that equivalent to a power purchase agreement. Power purchase agreement, they do count that way. Oh, and that's a good point. So actually, the power purchase agreement one side will eliminate the effect of the solar garden on the debt ratio. Yeah.
Just one point of clarification there, Dylan. Really interesting. So is this the bundled all in, all streams view? Like, does this include fire? Too?
It includes fire, but it obviously doesn't include the commitments to fire that haven't been borrowed for yet, because that'll be 2 fiscal years ahead.
And does this include the out of town limits revenue streams for fire?
I did that. I, again, don't know what the province does with that. I don't.
You included
Yeah, I
revenue.
did include
Okay,
that.
fair enough.
Yeah, so this is reflective of completing the fire station project. That's basically the jump from 2.7 to 6.8 is the completion of that project. And then I've made it maybe look better by including the revenues going into it, which the province might not. But ultimately, that's the real ratio.
Councillor Carver.
Thank you. Could you, CIO, could you explain again the debt service ratio? I have debt payments. And what's the other?
Debt payments as a percentage of tax revenue.
Thank you.
Yeah, and then you can reduce the debt payments on that in that equation. So above the line, you could reduce the debt payments by guaranteed income, which is being applied to the debt payment that is outside of your tax base. So that's where a power purchase agreement, this is like Eller's house, that eliminates the cost being paid on the Eller's house debt from appearing in the ratio because it has a guaranteed stream of income. And then the difference there, as Joe and I were saying, is that guaranteed stream of income works for a power purchase agreement. Probably they wouldn't say it works for a fundraising agreement with the fundraising of the fire department, because they know the power purchase agreement is going to happen. Whereas a volunteer fire service intends something to happen, but doesn't actually have a guaranteed stream of income to back it up. So that's where I don't know what the province will say, but I doubt they'll let that count. So, but as far as we're concerned, the debt ratio should have more to do with what our actual payments are. So.
Okay. Further to that comment about the province needing to be aware how the towns are adversely affected when due payments get delayed, Deputy Mayor, I think, had a suggestion for our visitor coming on Monday.
Yeah, I mean, she's there to visit that particular project, so we can mention how much we appreciate their financial support, especially when it comes promptly. But you know, I doubt the payments come from the federal level, so I doubt that she can influence that.
Okay.
That's great. I think the on the first page where we see the fire tax rate for the town, that elegant looking table, and the 16.7, I think when we get into the budget, having a table that also captures the out of town revenues in a similar format, if possible, would be really helpful, because we're also seeing year over year assessment increases in Mater's Cove, Indian Point, Oakland, and Clearland, and that's obviously 45% of the revenue for fires coming from our friends who live just outside of town limits. So,
and I think you're right. There was previously a breakdown, and you could just include it in the fire tax rate there and add 3 more lines for the 3 outside of town districts that they do give us the assessment numbers, so we would have
Yep, I have those numbers, so I can definitely put those in.
I think Francis did his hand up.
Deputy Mayor, had your hand up? No, canceled it.
Oh.
yeah, 16.7. Well, that's great. This really sets us up.
Yeah, I think we're in a good spot right now. So I think, you know, it's nice to know where we're at, and I think we've gotten there. So
So nice to know where we're at.
So we'll look forward to putting the other side of all this on in the budget presentation, so all the expenditures that relate to all of this cash and income. And we'll expect to be doing that next Thursday morning. Obviously, if there is any issue in terms of health and employees' ability to meet that deadline, I will let you know as soon as possible. But that's our expectation right now. I'd like to present it before the Easter weekend, so everybody can go home and look over all those documents over Easter. Oh, now the Deputy Mayor does have his hand up. Is this for real, Francis?
Yes,
Deputy Mayor.
yes, it is. It is for real. I'm tempted not to chime in so that at least we can all go and do what we need to do. But I was sort of wondering, since you're going away to bring something to the table, and we did talk about, at least from my perspective, that we actually want to start committing to doing something with the swimming pool. We are in a positive year in terms of the money that's on the table. And I know Ashley and Dylan will show us how best to utilize all of it. But can we maybe say, as we work on the policy and all that kind of stuff, that we start maybe putting aside some money, probably at this point I'll call it recreation reserve, but on this particular budget, start that process so that not all the money is allocated elsewhere and then we don't have anything there.
I mean, I don't think there's any harm in presenting a draft budget that shows, like we did with wastewater, because we didn't do it through the policy then, transfer to a recreation reserve as a new titled reserve. But it would actually be great to get a motion today. This is an actual meeting, directing staff to reflect a recreation reserve in the draft 2023-24 budget. And that gives us something, and we'll put a number there and you guys can determine whether you feel that's the appropriate number. But to get a direction, would be nice to get a direction on that now. And that way the intent is clear for the public that this is something council is doing. So if the deputy mayor wanted to make that motion, I don't know.
Councillor Finn wanted to say something before I jump in with a number, but I'm happy to move. Yeah.
I'm happy to second the motion, Deputy Mayor. The only point of clarification is beyond establishing the reserve, we need to also agree on how the reserve gets funded. And will the reserve be funded from capital sources or from revenue coming from the tax base? So I think having the recreation reserve is a wise thing to do, but we also need to agree on how we're going to put money into it. So I think if we can combine those two things in due course based on staff's recommendation, I think we'd be in a better place.
Yeah, I mean, I think the way I suggested the motion obviously doesn't specify, so what we would end up doing is coming with a recommendation based on looking at the capital flows and looking at the operating surplus and what we think we should do. But if council has a specific preference, you know, you can frame it that way in the motion, that's fine. I think we know that some of the capital flows are, you know, the area dividend, not as strong as they once were. So we may start to need to consider, and I know we pride ourselves on not having generally to use tax base to support infrastructure, but you know, we may need to contemplate that. And if we're budgeting on 0 area dividend this year was council's previous direction, I believe. So yeah, just one thing on that. But there's other capital funding sources. So if you leave it to us, Ashton and I will decide if you want to put it in the motion, go ahead.
I mean, or that's what the debate process is for, the budget process.
Well, yeah, it's only how it's being presented to you, and then you guys have discretion to change it anyway.
I'm happy to second that, Deputy Mayor, if you.
Yeah, well, yeah, so I'd like to move that we maybe think about 15,000. I don't know if 15,000 is the right number for a recreation reserve with staff providing suggestions as to where the money comes from.
Yeah. I think you draw it out of capital year 1.
Yeah, that sounds good.
I'll second that.
It's on the floor.
Okay. You've heard the motion, it's been moved and seconded. On the question,
So is that gonna be a fine, that 15,000, that be a final number, or will we allow staff to?
It's just a placeholder.
Is it a starting point? Okay,
It gives us something to talk about.
exactly.
and also could add to it through citizen donations as well.
Yeah. Yeah.
Naming rights for the new pool, that sort of thing.
The dome.
Okay, on the question. All in favor? The motion is carried. Thank you.
I guess we have a little trouble getting Emira presents the Mahone Bay pool, given they're not our. Hey, we went back on Nova Scotia Power now, maybe as a new customer, maybe they'd like to.
Uh-huh.
Or BMO.
Okay,
Thank you.
anything else?
So actually,
Nothing
the
further?
recommendation here is only to let council know that we don't have a recommendation. This is provided for information to be reflected in the budget process from here. So we're not looking for anything else today unless there's any other questions.
Okay,
I think there's a solar garden visit with the MLA on Monday, right?
Mhm.
Well, I think
I got no.
Suzanne was asking about the times. If you can confirm
If
that.
some of you don't have a calendar invitation, I'll let Lauren know that now and she'll make sure it gets to everybody. I thought it was to everybody, but yeah, it's at 10, but
It's at 10?
Councillor Carver, you,
Oh, I'm just asking that after we adjourn, will there be an opportunity for questions from the public?
we don't usually do it at special meetings.
No, what? We don't usually.
No, I don't think we do. I think it's only on regular meetings.
I don't think usually our special meetings are closed session meetings, so I'm not
Yeah.
sure, but
No, certainly.
It's a publicly advertised.
Is there anybody
televised meeting.
watching?
there are no questions.
No questions.
it wouldn't, what would it hurt to let them, to ask people for questions?
Yeah.
No, we're very,
I wonder if Councillor Carver wants to change her title to citizen now and ask the question. We can take one.
I have a question while we wait for the questions. if I
Yeah.
may. Last night we had a discussion about park benches and sponsoring of park benches. And today we had this discussion about you can't specify the use of money, or it's not, doesn't attract the tax advantage. So how does that square?
So it'll be the same concept. I mean, we'll have to say to people, the town is going to be installing benches and tables. If you want to make a donation.
We're not specifying cost.
We'll look at the donation amount and the amount of the purchase and, put two and two together. But yeah, it's a little silly,
So
but
it's a little dance.
yeah, yeah.
Okay, that's what I mean.
Okay. Our agenda is completed. Entertain a motion to adjourn. Councilor Owens-Croft moved, Deputy Mayor seconds, all in favor? We are adjourned. How many people do we have watching from home, Ms. Redden?
5.
5. Are there any questions from the 5 about any issue that was discussed today?
Nope, there aren't. There are not.
Okay. Thank you.